Welcome to our year-end lunch and learn. My name is Stuart Scow, and V is helping us out today, and we're going to present information on year-end lunch and learn. The first thing that we want to talk about, our agenda is install and upgrade, and we're just going to quickly review that. Then we'll talk about inventory control, receivable management, payable management, fixed asset, general ledger, and we've got information on this for the payroll one, which was last month's. When it comes to installation of upgrades, we like to be involved. Terry Armstrong is our main consultant who helps with that, and her information is here. Sharon has also done it. Ed and I will be happy to help you out with any questions as you might have and to help do the updates. Just a quick overview, update information that's available. We'll just simply go through these. Make sure you do backups, export your custom information. Make sure you understand there's two parts to the update, the installation of the application and the upgrades of the databases. More information on helps that might be needed, and if there's problems, we can establish a Dex SQL log to look at information that we might need. After the install, it's important that you then back up your databases and export all of your reports that have been updated so that you have fresh updates for those information. Okay, now we're going into the year-end closing and the order that this should be done. We're first going to talk about inventory, and then receivable management, then payable management, then fixed assets, then we'll review analytical accounting and general ledger. We're first going to talk about inventory and when it should be closed. Of course, this is a fiscal year close, and since inventory is not subject to dates, it is as of the date that you're closing, and so you should close your fiscal year as close to the end of the year as you can. We need to transfer the year-end closing transfers all information on quantity, cost, and sales amounts to the last year's record for the sales history summary. It moves the beginning inventory quantity from the quantity on hand to that, and zeroes out sold fields, quantity sold, and item quantity maintenance. The next step is you have options to remove discontinued items, remove sold receipts, remove sold lot attributes, and update the standard costs. We're now going to review the steps that should be taken for the year-end close. You need to make sure that all purchase order processing, invoice sales order processing, and inventory transactions for the current year have been completed and posted. You need to do a reconciliation for orders, SOP, POP, and inventory, and then we have a KB that describes what we should be doing in some detail. We'll open that up, and then we'll turn some time over to V to review the process.
Okay, inventory closing. The closing on inventory is not date sensitive at all. So whatever date that you do the closing, all the information will be transferred up to that date. What you need to do, make sure, the first step is to make sure that you post all transactions for that year that involve any inventory item. So that means all your purchasing transactions, all your sales transactions, and then inventory transactions. Once you got those posted, then you do want to do some file maintenance, the reconcile utilities, and there is an order on which module should be reconciled. The first one would be sales, second is purchasing, and then inventory. So to do reconcile, you would go to Microsoft Dynamics GP, Tools, Utilities, and then you select the modules that you want to reconcile. So sales would be reconcile, remove sales document. The first step is to select the reconcile sales document, then process it. Then the second, after that's done, then remove completed documents. Then the next step is to reconcile purchasing. So tools, utilities, purchasing, reconcile purchasing documents. And again here you go ahead and process the reconcile. And the last thing is reconcile inventory. And so that would be under utilities here and reconcile. Depending on how big your inventory database is, it could take only a few minutes or it could take several hours. So you might want to think about doing that early now, and then not wait until you're ready to do the year end. And also unmark, include item history to make it go faster. If it takes a long time to reconcile, you might want to start the reconcile process before you at night, before you leave, and then let it run overnight. Okay, once the reconcile is done, you will be doing your inventory count. And again, inventory count can be done in advance so that you can take a section at a time and make sure that you got that section done and not wait until the end of the year because it might take you several days. So and to count your inventory, there's several options. You can do stock count schedule from here, transaction stock count. Or print out an inventory count report under activity, stock count list. This list would show all items that are in your inventory setup, inventory cards. We came up with a third way of doing printing your count list. We create a smart list. So here's our smart list. Under inventory, I'm going to select item quantities, and I created a smart list that select quantity on hand is not equal to 0, and then I'll also put the location code in. The reason we need to select the location code is that if we don't, then it will print a line for each location, and then it also print a line for that item for the overall location. So that's why we need to have the location code in here. And that would create our smart list count sheet. Once I got that, I'm going to send it to Excel. Here's my Excel. All I need to do is just insert a column here for my count. And then one and here for the variance to record all the if there's any difference in the count. And that way I can just print this count sheet and give it to my warehouse people. And when you do that, don't include the quantity on hand, and that way to make sure that they do count the items. And then once they're done, all you need to do is just plug in the quantity and then see if there's any variance, and use only that variance information to make the adjusting entries for your inventory. Okay, so once you got that information, just enter the adjusting entry in transaction entry window. After everything is entered, then you just need to print a report showing your inventory status. Send the activity, do the historical IV trial balance, it's called the HITB, or the stock status, or the historical stock status report, and just compare that total to your GL amount in the inventory account. If everything balanced, then you're ready to do your inventory year-end closing. And make sure that you do a backup before you do the closing. So the closing would be under routines, year-end close. Okay, the year-end close would allow you to remove discontinued item, sold lot attributes, or sold receipts, and cost change history price. And for this last one, you can select a date that you want to remove up to. So if you want to keep a whole year of the history, then just select a date like a year before today's date. You can also update item standard cost. This is what if you're using FIFO or LIFO periodic. The standard cost doesn't update during the year. You can tell it to do that, and it would update from the current cost, which is the most recent cost on that item. Okay, so then you're done with your closing. I'm gonna turn over to Stuart to do some recap on this process.
We now do our sales order processing, purchase order processing, reconciliation, and then additionally the inventory reconciliation prior to closing. Then if we want to, or if we have GP 2010, we can have the opportunity to implement the historical inventory trial balance report at that time. Here are some knowledge base articles that we might need in reference to the year-end closing. The first one is, of course, the year-end closing procedure. The second is the order in which reconciliation should run. The third one is what to do if we accidentally close inventory twice. And the third one is the inventory year end does not remove discontinued items. And that completes our information on inventory. And so now we'll move into receivable management. There are what we should do, when closing should be done is we have the calendar year closing and we have a fiscal year closing. The calendar year closing clears the calendar year to date financial charges and moves them to the last year calendar financial charge summary. The fiscal year closing transfers all other amounts other than the finance charge to the last year's column in the customer history. The steps that we should take is make sure all items, all transactions have been posted for the year, perform the period end after that, and follow the steps in this KB article that we're referencing at this time. And so now I'm going to turn the time over to V to do this part of the closing for receivable management.
Yes. This KB article also gives you step-by-step instructions on how to do your year-end or receivable management. I'm going to go back into Great Plains and show the steps. Again, just like inventory, we need to make sure that all the transactions for the year has been posted. So one quick way of doing that is to go to Series Post and mark the batches that need to be posted. One thing I like to recommend is that you expand this because you might have recurring batches. So look at the frequency and post all the single use batch. Recurring batch, before you do that, make sure that you check the posting date so that you don't post into future periods. And receivables management closing is date sensitive, but there are some fields that are not. So it's things that are in the if you go to a view card summary, bring up a customer, you have the view, 3 different views here: the amount since last close, fiscal year, and calendar year. Fiscal year and calendar year are date sensitive, but the amount since last close view is not date sensitive. So whatever date you do the closing, everything in this view gonna go to the last year column. And this view is also used in smart list objects, like you bring up a customer and you have the fields like year to date and last year. That it's going to be using this information here. So just keep in mind that those are not date sensitive. So you want to make sure that you do not post new transaction in the new year before you finish the year-end closing. And then you want to do your normal period end, and one of the process for period end or month end is to make sure that your subledger balance with your GL. So print your trial balance, your AR trial balance, and make sure that you can compare that balance to your general ledger account for accounts receivable. And if that doesn't bounce, then you have a tool here that you can use to help you reconcile. So it's under Tools, Routines, Financial, Reconcile to GL. For Receivables Management, so you can go month by month or go from a whole year or any period of time. So just put the from and to date. Make sure you have the accounts receivable account in here. And if you have more than one accounts receivable account, then make sure that they're all in here. And also, if you have set up to track discounts available, then you want to have that account in here also. What this does is that it's going to create a spreadsheet, and it's going to compare all transactions that were issued within the receivables module, and compare those transactions with transactions in GL. And if it finds any transaction that don't exist in one or the other, then it puts that in an unmatched uh, glass. And so that way all you need to do is just pull up those transactions and research those, find out why you're out of bounds. So after everything is done, then you're ready to close the year. So it would be under Routines, Year End Close. In here, the closing, you have either fiscal or calendar close, or if they're both the same, then do close all. And always look at your last closing date, because you don't want to close twice. So check that date. And after you process it, then you'll be done with the year-end closing. That's another thing I want to mention, is that maybe this is time to do some cleanups. So if you have reprint statement activated, you might want to go in there and just remove all the statement copies that you've had up to a certain date, because those need to be removed, otherwise they just build up. So you want to put like a statement date, and then bring up everything up to that date, and then just click remove, and they're going to be removed. All right, so I'm going to turn the time over to Stuart now.
So in review of receivable management year end, we need to remember these key points. Make restorable backups when recommended in the KB. In receivable management is not completely date sensitive, and as there are some date sensitive features, the best option is to close the year on time. Here are some related KB articles on, of course, the closeout checklist, the effects of closing Great Plains after December 31st receivable management, and also removing outdated statements, as was previously mentioned. So now we're going to move on to payables management. Again, we've got a calendar year close routine to run, and we've got a fiscal year close. The calendar year close transfers 1099 information to the year-to-date column to the last year-to-date year column, and the fiscal year closes all other information amounts to year-to-date in the year-to-date to the last year column. The steps that we should take: make sure all transactions are posted, run our period end routines, make sure transactions for the new year are saved but not posted, make a backup, and then follow the steps in KB 875 169.
Okay, this KB article also gives you step-by-step information on how to close the accounts payable year. So it has all your reference there. I'm going to go into GP. So again, make sure that you post all transactions in the payables or the purchasing module, and then perform your period end or month end routines. Print your AP trial balance to compare with your GL, and you can use, if they don't balance, then you can also use the reconcile to GL uh, routine to help you find the information, help you find the incorrect information. We've always have questions uh, because in sales and receivables, you control the date, but in payables, a lot of time you have to wait for invoice that come from your vendor. It might take several weeks, and what can we do so that we can send payment for vendors when in the new year, if invoices are due. You can run, you can process checks and then not post the batch, not post the check batch. Just click on process later, and those batch would be saved and not post, so you don't doesn't get posted in the new year. Also, if you have uh, one invoice that need in the new year but that needs payment right away, then you can enter that invoice in payable transaction entry, enter your invoice, and print a payment on the fly for just that invoice. And print your check right here by entering an amount into the check field. Okay, now it's time to check your 1099, and we have created a smart list to help you uh, verify your 1099 amount. So I'm going to go to smart list, and select purchasing vendors, and you have a 1099 vendors object here. What I did is just I selected that, but just added some columns to it. What I did is I added the 1099 amount year to date, and then the amount paid year to date. So it lets you compare those two amounts. Uh, if they're not the same, it doesn't really exactly mean that it's there's something wrong. You could have had 1099 vendors that you pay for things that are not the 1099 type, but at least it would flag you that there's a difference there, and so that you can double check and make sure that the information is correct. So once you got your 1099 checked out, if there's any adjustment that needs to be made, you can go to cards 1099 details, bring up your 1099 vendor, and enter the correction amount. Make sure that you select the correct month and the year, because you do it month by month. Or there's utilities that can help you transfer 1099 information if you have it in the wrong type. Uh, Keep in mind that this utility only transfer 1099 information that have been entered as 1099. So if you have vendors that should be a 1099 and you didn't enter it as such, you won't be able to use these utilities. You have to change it in the 1099 detail window. But here, if you have like let's say miscellaneous uh, vendors that you enter transaction as interest, then you can transfer all those transactions from interest into miscellaneous. And here you can update only just the vendor, or update only the 1099 transaction, or both. So and then select the type that you want to transfer from, and then select the two. So if you want all transactions entered in certain vendors to be transferred to dividends, then that's how you do this, or select one of these type to get it transferred. And also make sure that you print all the reports that you need, like vendors period analysis before you do your year end, and then install your payroll year end update if necessary. There's no change for the 1099 miscellaneous or interest, but there is some change to the layout of the 1099 dividend. So if you have that type of 1099 vendor, you do need to install the year update. If you have made any manual adjustment to the 1099 detail, and if you're gonna run the reconcile for calendar year, make sure that you select the exclude 1099 amount. Otherwise, all the work that you did gonna be lost, and it will revert back to the original amount. Okay, so now you're ready to print your 1099, but you don't need to print them right now. These can be printed anytime. So just as long as you have the correct year in here, and then you would select the type that you want to print the 1099 on, and the edit list here would help you fill out your 1096 form. Actually, I need to select the form type to single feed. Nobody use continuous anymore. And I'm printing my 1099. Okay, so now you're ready for your year end for payables. Just make sure that you have a pre-year end backup done. And we're gonna close the year, so it's routines year end close. And again, just like in receivables, you have a fiscal year end close or a calendar year end close, or if they are the same. And again, make sure you look at your last closing date. Make sure that you don't process your year end closing twice, and just close the year. This report just gonna bring up all the vendors information that's gonna be transferred to last year. It could, if you want to print that, it could be a really long report, so I would suggest that instead of printing them, to save them on the file, and that way you don't need to print a lot of pages.
Okay, so that completes the accounts payables management. As a quick review, we follow the steps outlined in this KB. As with receivables, payable management is not fully date sensitive, but it is still recommended that we proceed process year end close to the actual date. 1099 will not auto-populate if the transactions are not processed as 1099s at the time of their posting. And so now we'll move on to fixed assets. Fixed assets closing can be done but after payables management is done, but before the general ledger. Each book can be closed separately, but all books must be closed before processing any fixed asset transactions for the new year. The fixed asset year-end closing process maintains year-to-date information. It moves it from the current year to the prior year. It copies the quantities to beginning quantity field. In the asset book window, the year-to-date depreciation amount is removed. The cost base is copied to the beginning year cost. The life to date depreciation is copied to the beginning reserve, and salvage is copied to beginning salvage. Current fiscal year increase for each closed book. What are the steps that I should take? You want to print all the reports that you need for that year that you are closing, because the reports can't be reprinted after the close. You want to make a backup. You want to follow the steps in this KB, the year-end closing procedure for fixed assets. And you want to make sure to take depreciation on the last day of the year that you are closing before you close the year. If you don't do this, you might end up with a depreciation taken for a full year on that short period. So it's important that we do the depreciation on the last day of the year. And that completes our information on fixed asset. And so now we're moving to general ledger. General ledger year-end close should be done as after all the other modules have been done. The modules are done in this order: inventory, receivables, payables, and fixed assets. This we've talked about before. The year-end closing procedure closes all profit and loss accounts out to retained earnings, leaving the profit and loss accounts with zero balances. All balance sheets accounts are updated with a beginning balance for the new year, and the retained earnings accounts is updated with the amounts from all the profit and loss accounts. If you close one retained earnings account, it can do that, or you can split it to division accounts if you set it up that way. What does the year-end closing process do? Retained earning accounts are the only balance sheet accounts that should have different beginning balances at the end of the balance year. The year-end closing routines move all open transactions from the GL 20,000 table to the GL 30,000 table. The fiscal period process or tables are updated and marked to mark the year that is closed as historical. Steps that should be taken is to follow the KB for the year-end closing. There's a frequently asked question, and multi-currency year-end reports may be issued.
Okay, the last step of the year-end closing is closing general ledger. So make sure that you post all transactions, all adjusting entries for the year, and then I think the most important part of the closing here is to verify that your GL accounts posting types are correct, because like we mentioned before, what the closing does is that it clears out all amounts in P&L accounts put them in retained earnings account, and then move all the balance sheet account uh, forward to the new year. And so if you have an account that you think should be balance sheet account but have set up as a P&L account, the amount in that account will be cleared into retained earnings, and it's going to create a problem. So we want, before we do anything, we want to verify that all your posting accounts are set up correctly. And so we create a smart list for that. Okay, so under financials accounts, what we did is that we create an exception report. So under balance sheet accounts exception, I would find the segment that your natural account is in, and then make that segment filtered to be greater than the value is the highest value of your GL account for balance sheet, which is in Fabricam here is 3999, and then the posting type is equal to balance sheet. So if we have any accounts that is over the 3999, so starting with 4000, which is should be a revenue account that is set up as a balance sheet account, then it's going to show up. And the nice thing with having it in the smart list window here is that you can just select it right on here and go and change it. So if we have here balance sheet as a sales account, as a balance sheet account, definitely should be changed to P&L. So you just double click on it, takes you into the maintenance window, and just change that to profit and loss. And so just proceed with making the correction until everything is all the accounts that is not supposed to be on this report is gone. And so just refresh it and make sure that you took care of everything. And we do the same thing with the P&L accounts. So on this P&L account exception report would be that segment is less than 4000, and the posting type is equal to profit and loss. So we're done with verifying posting accounts. You also we want to make sure that we have the fiscal period set up for the new year. So under setup company fiscal period, if you want to create a new year, you just type it in. The number of period would default in from previous setup, and then the first day and the last day would default in, but always verify that. Always double check the first day and the last day to make sure that you're not skipping any period. And then click on calculate. And there you have your new fiscal year. And I would recommend that you close off periods and leave maybe what you need to work on open. Also, if you want to have all period for your current year closed, but then just leave one period open for adjusting entries, you can create an extra audit period. So let's say you're in 2017 and you want an extra period, so you change that to 13 period. And okay, be- because it creates a 13th period, it changed your starting date. So you need to make sure that you go in and change your starting date here to 2 1 uh, February 1, 2017, and then the last one would be December 31st. So the period period 13 would only be 1 day. So the last day of the month. So make sure that you do that, and then recalculate, and then make sure that you do a reconciliation of general ledger. Do the reconcile, so it would transfer your information to the correct period. And this needs to be done before you close the year, because you can't go back after in the historical year and create a different period. Once that's done, uh, and the thing is, this is optional. You don't have to do that. So some people choose to have a separate period for adjusting entries, but other people don't need that. And so once you're done with that, you want to check this setup for financial. So go to setup, general ledger, and in here, this is where you're gonna put the retained earnings account that you want all your P&L accounts to close to. And you can select just one retained earnings account, or you can close to divisional account segment. So you select your division segment, and for this Fabricam, it would be segment 1. So we need to make sure that you have one retaining account set up for each segment, so each division, rather. So let's say you have division 000, 0100, 0200. Those the number in that segment needs to be there should be one for each division, but the rest of the segment, like in here 3030-00, the account has to be the same. The number is in those two segments would have to be the same, otherwise it won't recognize it as a retained earnings account for each division. And you want to maintain history in accounts, transactions, and allow posting to history. The rest of the selection here is up to you. We should also do some maintenance on tables, so we're going to do check links. So Microsoft Dynamics GP maintenance check links under financial, and just select all the tables that you're using. So you can do all and then just remove what you don't need. If you're if you're not using multi-currency, then just remove them. So once you got all the tables you need in there, then just click OK and we'll process it. So, and make sure that you print all the reports that you need. One of the one of the reports that you really want to keep is the trial balance report. Detail. You want everything for your open year, so your last open year. And then this report might be really long, so what you want to do is really save it to a file instead of printing it out. So go ahead and set up to print to screen and then to a file, and just save it to whatever directory you want to save it to. Create a folder for it. And also print your financial statement. So now you are ready to do your year-end closing. So the Okay, so in here again, it's going to bring up the retained earnings account that you have set up to close to. Um, Always check the last closing date, just to make sure that you're not closing your year twice. And in Fabricam here, the last closing date was 2014, because that was the last time that the year-end closing was done. So if I tell it to close year now, it's gonna do the closing for 2015, and then I have to do 2016 uh, to close the next year. We always suggest that you do the closing uh, on the server, because the we need enough disk space so that you don't run out of space, because the table, the GL 20,000, gonna be double in size while you're doing the year-end closing, because it's gonna create some temp tables. And also make sure that everybody is out of Great Plains when you do the closing. And when when that process being done, it might go up to 50% and then kind of just hang there. So don't panic. It's still processing. It's not hanging or anything. Just give it some time to close, and make sure that you print all your closing reports, because those cannot be reprinted. So that would be the end of the process for closing your GL. And Stuart gonna go over some key points and review some of the steps that we just did.
So just in review of what we do at year-end closing, we need to make a restorable backup as needed for all the steps. Make sure that you have enough free space to allow the server for the growth of the table GL 20,000, as it's going to double in size. Perform the year-end closing on the server. Have all other users out of Great Plains when we're closing, and the year-end close routine does appear to hang at 50%, but it's still processing, so let it run. Here are a list of knowledge base articles that we can use for setting up adjusting periods, divisional retained earnings, changing the posting type for an account, retained earnings account not found, querying to clear beginning balances for unit accounts, and general ledger, year-end close still in process and batch cannot be posted. Let's That's the end of all of our general ledger closing. We want to thank you for attending our year-end lunch and learn. On the screen are our contact information for those who can assist with updates, upgrades. Please feel free to contact them. If there are any of the knowledge base information that you might need, if you have questions, you feel free to contact us, and we'll be glad to review that information with you and help you in any way that we can. We thank you for listening.